What's up, traders? Today I'm going to walk you through one of the most powerful tools in the complete trader suite, the FVG Target Finder version 2.1. If you trade ICT concepts, you already know fair value gaps are one of the most important price action elements on your chart. But here's the problem: when you've got multiple FVGs stacked up, how do you know which one price is actually going for next? That's exactly what this indicator solves. It doesn't just detect FVGs, it runs a 100-point scoring algorithm to tell you which imbalance has the highest probability of being filled. Let me show you how it works. Alright, so I'm here in NinjaTrader 8. I've got a clean chart pulled up. This is the NQ 5-minute. Let's add the indicator. Right-click on the chart, go to Indicators, and search for FVG Target Finder. There it is. Click Add. Before we hit OK, let me walk you through the settings because there's some important stuff here. Starting with the FVG settings group. Minute FVG size in ticks, this is your filter. Default is for ticks. If you're on a lower time frame and getting too much noise, bump this up to 6 or 8. If you're on a higher time frame and not seeing enough gaps, you can bring it down. I like for the 5-minute chart. Max FVGs tracked. The indicator tracks up to 25 simultaneous FVGs. That's the default and it works great for most setups. It automatically cleans up filled zones so your chart stays readable. Fill mode, this is a big one. You've got two options. 0 for full fill, the FVG is only considered filled when price completely trades through the entire zone. 1 for CE fill, the FVG is considered filled once price touches the 50% midpoint, the consequent encroachment level. This is stricter and more in line with how many ICT traders define mitigation. FVG mode, another important choice. 0 for wick-based detection, this is the standard ICT definition, measuring from the wick of candle 1 to the wick of candle 3. 1 for body-based, this gives you tighter, more conservative FVG zones using only candle bodies. I recommend starting with wick mode and full fill, that's the classic setup. Trend EMA period, default is 50. This is the EMA the scoring algorithm uses to determine trend direction. The indicator doesn't plot this EMA on your chart, it's working behind the scenes in the scoring engine. 50 is solid for intraday. In the display group, show CE levels, I always keep this on. It draws a dotted midpoint line on every active FVG. That's your consequent encroachment level, a key reference for ICT traders. Show labels, this puts probability percentages, visual meter bars, and strength ratings directly on each zone. Super useful, keep it on. Show target panel, this is the premium analysis panel. Definitely keep this on. I'll show you what it looks like in a second. Panel position, you can put the panel top left, top right, bottom left, bottom right, or turn it off entirely. I like top right so it doesn't cover the price action. The font and color settings are straightforward, you can customize everything. The defaults look great on a dark chart. Bullish FVGs are blue, bearish are red, the active target is gold, filled zones go gray, and mitigated zones are slate. You can adjust opacity too, the default 15% keeps zones visible without cluttering the chart. Let's hit OK and apply the indicator. Alright, look at that. The indicator is loaded and you can immediately see what's happening. Let me break down what you're seeing on the chart. These colored rectangles are your fair value gaps. Blue zones, these are bullish FVGs, gaps created by aggressive moves to the upside. They sit below price and act as support. If price drops into one of these, buyers are expected to step in. Red zones, bearish FVGs, gaps created by aggressive selling. They sit above price and act as resistance. Now look at this gold zone, see how one of them is highlighted in gold? That is the number one target. That's the FVG the algorithm has determined price is most likely going for next. See these dotted lines running through the middle of each zone? Those are your consequent encroachment levels, the 50% midpoint of each FVG. In ICT methodology, when price reaches the CE level, the FVG is considered mitigated. It's lost much of its pull. The indicator tracks this automatically. Now look to the right side of each zone. You've got labels showing a directional arrow, up triangle for bullish, down triangle for bearish. The fill probability as a percentage. A visual meter bar, those filled blocks give you a quick visual read. And a strength rating, high, MED, or low. The target FVG has a pointer arrow and is displayed in gold. Everything else is color-coded green for high, orange for MED, and red for low. And check this out, see that gold arrow on the current bar? That's pointing in the direction of the primary target. If the target is above price, you get an arrow pointing up. Below price, arrow points down. Instant directional bias. Now let's talk about the real power of this indicator, the FVG Target Analysis panel. At the top you've got the title in gold, FVG Target Analysis. Right below that is the confidence meter. This tells you how dominant the number one pick is over the competition. Strong confidence means the top target has a significant score advantage, the signal is clear. Moderate means there's a decent leader but the second place FVG isn't far behind, the call is debatable. Weak means multiple FVGs are scoring similarly, you might want to wait for more clarity. This is color-coded too, green for strong, orange for moderate, red for weak. Below the confidence line, you've got up to 5 entries, the top 5 ranked FVGs. Each entry shows the rank, number 1 through 5, with the target highlighted by a gold pointer arrow and a gold sidebar. Direction, bull or bear, color-coded blue or red. The price range, the exact upper and lower boundaries of the FVG. Distance in ticks, how far the midpoint is from the current price. The probability percentage, this is the big number. A strength rating, high, MED, or low relative to the leader. The raw score out of 100. And a probability meter bar, a visual fill bar showing the probability. The target entry has a subtle gold highlight background so it pops. Everything updates in real time as price moves. Now let's get under the hood. What makes this indicator different from every other FVG indicator is the scoring engine. Every active FVG is scored across 5 weighted factors, totaling 100 points. First, proximity, worth 35 points. This is the biggest factor. FVGs closest to the current price score highest. The market tends to address the nearest inefficiency first. The algorithm scales this based on the average range, so it adapts to volatility. Second, trend alignment, worth 30 points. This is where ICT methodology really comes in. In an uptrend, price above the 50 EMA or bearish FVGs above price are the primary fill targets. Because in a bullish market, price is expected to reach up and fill those sell-side inefficiencies. In a downtrend, bullish FVGs below price are targeted. Countertrend FVGs still get some points because they act as support and resistance, but the aligned ones score much higher. There's also a momentum component. If price has been moving up over the last few bars and there's an FVG above, it gets a small bonus. Third, size, worth 15 points. Larger gaps represent bigger inefficiencies. They act as stronger magnets. The score is proportional to the gap size relative to the average range. Fourth, recency, worth 15 points. Newer FVGs matter more. The score decays over approximately 300 bars, so stale gaps gradually lose priority. A fresh gap from 5 bars ago will outscore an identical gap from 200 bars ago. Fifth, displacement quality, worth 10 points. This measures how impulsive the candle was that created the FVG. If the middle candle has a range significantly larger than average, say 1.5 times or more, it tells you that candle moved with conviction. Those FVGs carry more weight. After scoring, probabilities are calculated by squaring the scores and normalizing. Squaring amplifies the gap between the leader and the rest. So if one FVG is even slightly ahead, it pulls further away in probability terms. This gives you clearer, more decisive signals. One more thing, mitigated FVGs receive a 40% score penalty. Once price has touched the CE level, that gap has lost much of its magnetic pull, so the indicator deprioritizes it. Let me scroll through some recent price action and show you how this plays out in real time. Look here, we've got this bearish FVG sitting above price, highlighted in gold. The panel is showing it at around 62% probability with strong confidence. The trend is bullish, price is above the 50 EMA, so the algorithm is correctly targeting this sell side inefficiency above. Watch what happens as price rallies. It comes right up into that zone. See how the CE dotted line gets touched first? The indicator now marks this as mitigated, the zone color shifts to slate gray and the score drops by 40%. The gold target shifts to the next highest scoring FVG. Now here's an interesting spot, we've got 3 FVGs relatively close to price. Look at the confidence meter, it says moderate. That tells you the call isn't definitive. In a situation like this, you might want to wait for one of them to get mitigated, which will thin the field and give you a clearer signal. And here, price punches completely through this zone. With full fill mode on, the FVG is now considered filled. Watch, it disappears from the chart and the panel re-ranks the remaining targets. The next candidate automatically becomes the new leader. Notice the gold arrow on the current bar? As the target shifts from above price to below price, the arrow flips. That's your instant directional bias updating in real time. Let me give you some practical tips for using this in your trading. Tip 1. Use confidence as a filter. When confidence is strong, you have a clear target, that's when you want to be looking for entries in the direction of the target. When it's weak, the market is undecided between multiple inefficiencies, maybe sit on your hands or reduce size. Tip 2. Combine with your own ICT analysis. This indicator doesn't replace your understanding of order blocks, liquidity sweeps, or market structure. It enhances it. Use the target as a directional bias, then use your own entry models, breaker blocks, order blocks, whatever your age is. Tip 3. Watch the CE levels. When price taps a CE level and rejects, that's telling you the FVG still has pulled but partial mitigation has occurred. The indicator will penalize that gap and may shift the target, pay attention to those transitions. Tip 4. Multi-time frame context. Real quick on customization, the indicator is fully customizable. You can change the panel position to any corner or turn it off entirely. Adjust font sizes for the panel and labels independently. Change any color, bullish, bearish, target, filled, mitigated, and CE levels all have their own color picker. Adjust zone opacity so the FVGs don't overpower your chart. Switch between wick and body detection modes on the fly. And toggle between full fill and CE fill modes. Everything updates in real time, no need to remove and re-add the indicator. And that's the FVG Target Finder version 2.1. To recap, it detects fair value gaps, scores them across 5 factors, gives you fill probabilities, ranks your targets, and tells you which imbalance the market is going for next. All in real time, all rendered beautifully on your chart. If you want to add this to your NinjaTrader setup, head over to tradersuite.online, I'll leave the link in the description below. If this video helped you out, smash that like button, subscribe for more trading tools and tutorials, and drop a comment below if you have any questions about the settings or the scoring algorithm. I read every single one. Until next time, trade smart.